we have boomers, embracing a 5% allocation to of Bitcoin in their portfolio. Where do we go from here? Who's the next buyer? Who's the marginal buyer of this asset class? Like, everything is just so optimistic from that point that it's so impossible for any reality to live up to those expectations. Crypto is going to finally have to provide value, right? It's going to finally have to deliver on what it's kind of been saying it's been valuable for this entire time.
Hi guys, welcome back to Material Wealth. Today I'm pleased to say I have on Jack Niewold. How are you, Jack?
Doing great. Suffering a little bit, but through a couple of things, a cold and bear market blues, but we're here.
Yeah, I think we're all suffering from that at the moment, mate. So just for the audience that are new to you, I know you've got your own massive audience, of course, but would you just like to give them a brief introduction to yourself and like how you got into the crypto space?
Sure, absolutely. Yeah, I come from a traditional finance background. In 2021, I made the switch to crypto full time and started writing research content for kind of the TradFi investor. And we published research for a couple of years. I ended up selling that publication to a VC firm, worked with them for about a year, and then launched my own podcast and have been doing that for about a year and a half.
Yeah, it's been a while since we spoke, and it was coming into voting Trump in and everything else. And we were talking about, Trump getting elected and how that would affect the market. And you called it pretty right. And we had a long conversation about that of there would be like the initial spike and then things would kind of slowly taper off. And did you kind of see it going quite like how it's gone? Or from when we last spoke, did you see it kind of dipping as much as it has? I mean, as we saw, like Bitcoin was hitting, it was flying at one point, and now we're kind of left at this kind of tapered off space that it's in.
Yeah, a couple of thoughts here. I mean, first of all, when you work within the crypto industry, I think it's like crypto is almost inescapable to some extent, right? Like, you're not gonna, I realized this maybe the first time in probably like the end of 2023 where I was like, oh, I might be able to see the top, but it's not going to do much because, my career is fully encompassed within crypto. I can't like sell the top on my own career, really. I guess you can do some things. You can change career. You can shift career. You can shift lanes to a higher paying position, or maybe there's more opportunities at the top. But as your career is kind of fully encompassed in this crypto thing, aside from buying and selling the assets themselves, you can't really do that much within the market relative to yourself. So I'll say that, first of all, is it's hard to figure out, even if you can call the top, it's hard to figure out how to execute on that. As far as Trump's election and inauguration itself, what I will say is I think I've begun to appreciate the idea of like catalysts and remaining catalysts in crypto. And if you have this massive macro catalyst like the Trump election, and he's promising to be the crypto president, and we're gonna have the Bitcoin reserve, and you just understand that he's this guy who's like immensely bullish on the space, and he's kind of promising everything, then the reality, it's difficult for that reality to play out, right? It's like, it's like a used car salesman or something, right? This car's going to be so great for you. You're going to be able to, go on that cross-country road trip you always dreamed about. And, and this car will never break down on you. And whatever that expectation is, it's always going to be worse than the expectation. So, imagine that, right? Like, there's no way you buy that used car and then you drive it off the lot. There's no way things can get better from there, right? You have the mind, this is going to cure my relationship with my wife or whatever, like everything is just so optimistic from that point that it's so impossible for any reality to live up to those expectations. So I think that's kind of what we have had with the Trump situation is Trump got elected. It was very clearly bullish for the industry, but the industry was pricing in the promise of a crypto positive presidency and an incredibly friendly regulatory environment. And then as reality played out, even though it was bullish, it was slightly less bullish than what the market kind of expected. And that's actually quite bearish for price action and for industry expectation. So I kind of, that's how I think about exactly how that all went down.
No, I completely agree. And I think you're right. When it was so largely spoken about, especially on, crypto Twitter, which is still kind of the hub of everything, and it was so built up and everyone was like, we're all going to be millionaires and billionaires, it's never going to live up to whatever that expectation was, however high we thought or believed it was going to. And it's still shot up, but it's never going to reach those milestones that you've somehow pre-written in your head. And so therefore a lot of people will see it as not as big an event as it was, or kind of undervalue it. And then, as we've seen, especially online, like that kind of feeling can turn the tide slightly towards a more negative feeling, even though it really shouldn't. Like, we're still in a great space. It's still up better than what it was previously. Like, wins are wins. We always want that like steady climb. Obviously, there's going to be mountains and valleys within the climb, but as long as it's continually going up over a period of time, then it is succeeding, right?
I think on the other hand, too, this is not just like a Donald Trump specific phenomenon. For example, right now, looking at Bitcoin, right? We've had the ETFs, we have institutional adoption, we have boomers, embracing a 5% allocation of Bitcoin in their portfolio. Where do we go from here? Who's the next buyer? Who's the marginal buyer of this asset class? It's hard to say, and I think that might be like a bit of the malaise that we're experiencing right now as an industry. Is just like, where do we go next? What's the next frontier of adoption? And that's making us kind of have to take a hard look at ourselves and understand this industry in a new way.
Of course. And do you think it could be maybe one approach is like, we've already seen it begin, is where crypto's kind of becoming more aligned in certain areas with like traditional finances and institutions? Like, do you think that is going to help progress it and pass it out to a wider audience and make it more adopted?
Yeah, so in my opinion, it's kind of a catch-22. So for example, like Stripe acquires Privy, right? That's a huge acquisition, acquiring a crypto native company. I think it was a 9-figure plus acquisition. Phenomenal outcome for the founders. However, now no token is going to come out for Privy, right? There's no way for retail to speculate on Stripe at all, right? Stripe is still a private company. Maybe someday they'll IPO, but like, my point is, if crypto rails are integrated into traditional finance, that doesn't necessarily mean that crypto maintains its status as this kind of like self-contained industry. We can't speculate on these assets anymore. We can't imagine, an acquisition, right? There's no real structure for a Privy to have launched a token and then for an acquisition to have happened. It's impossible. So I think TradFi is integrating crypto rails, but it's not really doing anything for the average kind of retail buyer of crypto, which is kind of a bad thing. We're not, we were promised, oh yeah, the institutions are going to come and we're going to have all these TradFi integrations and tokenization and blah, blah, blah. But the integration has actually been harder than expected. It was a premise with Ethereum and Solana as well, where, these institutions are going to use these rails. And then we see the blockchains, these institutions launching their own blockchains. And it's like, okay, what about Solana? We built this for you guys, and now you guys are building your own chain. And it's almost like, it obviously makes sense in retrospect, but these institutions kind of picked and chose exactly what they were going to use and where they derived value in the crypto industry. And when they did the kind of equation, they said, it doesn't really make sense for us to use Ethereum. We're going to build our own thing. So a lot of the crypto technology that we've kind of, or maybe I'm not going to take credit personally, but the industry has kind of pioneered. The TradFi industry has looked at that and said, yeah, we'll use this. This is valuable, but it's valuable in the way that we see fit, and we're going to use the technology that we decide to go forward with, and it doesn't benefit the average crypto retail token holder at all. So it's been kind of, I imagine, disappointing as a retail investor.
No, I agree. On hindsight, it's kind of like, well, yeah, obviously that makes sense. But is there, from moving on from here, is there any way you see of this changing? Like, what would be the next steps that do make it a lot better for like your average crypto person?
Sure. I mean, ultimately, let's not get it wrong, that this technology is not useful, right? These companies are still going to use crypto rails, and the product experience is still going to be more useful at the end of the day for the end consumer, right? We're looking at real world assets. We're looking at tokenization. We're looking at equity perps. All of these things are interesting products that are going to be brought to the retail user and that are incredibly useful. So it's not like these products aren't going to get in the hands of the user. However, the way the value is distributed is going to be much more focused on the traditional finance industry than the crypto kind of token holder, which is a bummer, at least for crypto investors. I will say things are looking pretty grim right now, and we talked about a year ago and everyone was hyped and the Trump presidency. Oh wait, I guess it was the last year. Yeah, it was 1 year of the Trump. I was getting my years mixed up. Anyways, we talked about a year ago about the bullishness of the Trump presidency, and in the same way that everyone was bullish back then, I'm actually bullish now, because of that same issue of consensus, right? Everyone thinks, oh, there's no catalyst left. Now is I talk to founders, that's my job, right? And I see founders in a completely new mindset around crypto. To me, it's so much more bullish having a founder who's like smashing his head against the wall trying to gain adoption for his product than to be able to launch $1 billion token off of like something that really is a feature more than a product or something, right? Oh, this is gonna be a blockchain that eats, gaming or something and commanding a gazillion-dollar valuation. That's not a bullish thing. Like, again, where do we go from there? However, if we have a founder who can get a gazillion users, that's a bullish thing, even if the token valuation hasn't caught up yet. So, I think it's a much better time to position yourself in the industry than it was a year ago.
Yeah, agreed. And is there like any sort of like a common problem that all these founders that you speak to are like either tackling or trying to approach in a different way, as you said, to combat this?
Yeah, I think the biggest struggle is the eroding of the edges of crypto. So previously, crypto, as you mentioned, kind of crypto Twitter was this insular thing. Everyone congregated in the same places. There were crypto YouTube channels, crypto subreddits, crypto Twitter, and now we're seeing the death of that. And founders are going to have to directly go to users and directly offer them a real value proposition that can overcome the friction of whatever inconveniences to start using the product. When previously people would check out crypto products just because they were crypto products. That wasn't a sustainable paradigm ever. But ultimately it is bullish for the industry because crypto is going to finally have to provide value, right? It's going to finally have to deliver on what it's kind of been saying it's been valuable for this entire time. So that's the struggle of the founder. But again, it's bullish in a new way because I'm not just going to buy your token because I think it's going to go up. I'm going to use your product, and the founder is going to be able to capture a little bit of value, and they're going to figure out how to incorporate that into the value of the equity of their company or the value of their token. And then the token is going to go up in price, and then there's a whole reflexive thing that starts over again. But this time it's from first principles and it's from value creation instead of just kind of this speculative bubble.
There was definitely, I went through it. I was looking at apps, for example. If they were crypto based, I was giving them more time. I was giving them like a bit more of a buy and allowing them, like, if they're not quite up to scratch as, say, something that I could go and download off of the Play Store, for example. I didn't mind because it was crypto, and I was like, no, I'm letting it build. But obviously, with more people coming into the space, more eyes on it, people interested, is that these products now need to be up to the same scratch as Web 2 ones, and I think that's definitely pushing people to kind of like expand and do more and really like build out what they're working on. Is there like, so if someone was to start to build today in crypto, is there like something you really believe they should just avoid at all costs? Like there's this kind of common thing maybe people done early on that they should definitely not be doing.
I think the idea that you're going to build like some crypto concept and then launch a token, and then just for being conceptually interesting, it's going to be worth something, that is dead. That's completely dead. And we saw a lot of this, right? Like, oh, I'm going to build a metaverse. I'm going to build a layer one. I'm going to build the universal DeFi platform and have 0 users, but still command a relatively ridiculous valuation relative to kind of the rest of the finance world. I think that's dead. Which, again, that's like kind of a good thing, right? Like maybe it's not good for like speculative investors trying to, make a 5x in a month. However, for the industry, it means that there's not this like ball of capital that can be extracted anymore. Yeah, I think that kind of paradigm is dead. And we're seeing a new breed of founders. Like there's an archetype of founder I remember kind of like 2021, where it was like, oh, I'm a 21-year-old, I studied computer science, I dropped out, and now I'm building X thing. And I raised a massive round from VCs that are just starting to invest in the crypto space, and I'm anon. I don't have any reputation, and this is going to be the next big thing. That founder archetype doesn't exist anymore. It's much more kind of like battle hardened founders that are maybe coming in from Web 2, or they have previous failures even in crypto. That founder archetype is going to be much more successful because they're building in crypto for, I don't want to say the right reasons necessarily. Like they can still be mercenary kind of style founders, but they're building in crypto because they see it as a better opportunity. And they're able to execute on a vision because they've already executed on one vision and learned the lessons from the first vision. So this kind of archetype of this immature founder that like, the wonder kid, like it's gone, and it's a good thing.
And I think obviously the longer that crypto's around and keeps building, the more of those we're going to get. So it's only going to improve the space overall.
Well, again, it's about the fundamental value proposition. And if you see that and you're building in the space because you say, oh, this is like the right technology, or this is the right way to distribute my product, or here's the edge that this thing provides over, what existed previously, great. That's like the right reason to be building in crypto. There's a built-in audience for meme coins, right? Like I want to build a terminal for meme coins. FOMO is doing this right now. Like there's interesting products coming in the space, but again, they're building because of a specific audience, specific distribution, specific technology, or they think they can offer something unique in terms of product, and they're not building it because they think they can launch a token and make an insane amount of money in a short amount of time.
And do you think that's due to this? Do you think there's still like a really unexplored opportunity that you still find interesting, that you'd like to see like more people focus on, or like more projects take part in?
That's a great question. I haven't thought much about it. I think the L1 space is pretty saturated. I think the idea that you're going to do something now with a new L1 or that it's going to command some crazy premium, I think that's kind of over. DeFi, it definitely appears to me that there's still an opportunity in the DeFi space. Lending, collateralizing stocks, and like bringing the DeFi feature set to equities and allowing people to borrow against their equities or lever up on equities, something like that is an interesting feature that I think DeFi, maybe bringing more TradFi instruments and stuff online and incorporating that into DeFi, that seems like an interesting opportunity to me. I think the kind of meme coin space has kind of, I mean, there will be ups and downs. I don't think it's going anywhere. I think that it's kind of hard to innovate in that space, right? Just kind of by the nature, it's just a static kind of mimetic instrument. But we'll see interesting stuff. Like I do want to see more experimentation. Like I know there was some like sports, like fantasy sports stuff happening. Decentralized social is still an interesting space. Like I saw something recently which was like the second guy to shear sheep. They probably told him like, oh, there's a guy that already shears sheep, you know? And like I see that as like a parallel for decentralized social, for example, right? Just because like Farcaster didn't experience massive success does not mean that the right founder in the right time can come on and have success. I think people need to be willing to try new things, and just because something has existed in the past and not worked doesn't mean you can't bring your own kind of secret sauce into it.
Well, of course, yeah, I completely agree, and especially just going off the back of you saying social, we've got so many social platforms that we use daily. You know, so integrated into our lives that it would make sense that that would be an area to continue exploring. As you said, just because it hasn't worked as yet doesn't mean it's not going to work. I mean, how many different apps were already out before we got Instagram and TikTok? Do you know what I mean? They weren't just the first. It built towards that. So I definitely believe that, you know, there's still more juice to be squeezed from that area. It's just it needs the right idea, the right layout, the right ease of use, whatever the case may be that comes along. And I definitely think it can have a huge place in this space, along with sorry, as you mentioned DeFi as well, and bringing more like traditional finances into the space. I think has room. Like, for example, not to promote wealth at the moment, but since we're here. So what they do is they allow you to via crypto. So it's like $20 worth will get you in, and you can start buying pre-IPOs to like SpaceX and XAI. So someone like myself, who I traded initially when I first got into trading, like 2020, 2019. I was a penny stocks guy, and I loved that side of things. But the idea of getting into like pre-IPOs and stuff like that was always something I couldn't do and would love to do. So for me, that is, and I don't say that just because I'm here at Wealth. It's genuinely something that interested me and thought that would be a great thing. And so I love the idea that you can do that now as well.
Yeah, I do think to this idea's credit, we've seen crypto come up with new ideas. In a lot of cases, crypto has imitated TradFi. Recently, we've seen crypto come up with new novel ideas that I think TradFi is looking to crypto and saying, oh, this is this kind of sandbox for experimentation. An example of this is kind of the public sale meta. You know, why did Solana choose to offer public sale to its users, but SpaceX doesn't, right? Why can't SpaceX offer, and in some cases it's regulatory, but in some cases it's not. You know, big companies like Gumroad, I know, have done public offerings. And I think we might start to see more of that. People looking into crypto as a sandbox, taking the ideas that did work and then porting them over to TradFi.
Yeah, I think that's true. That definitely makes a lot of sense, especially as we said earlier, with a lot more institutions being involved, even if they're doing it their own way. They will then see how else they can use the technology that they're now using, but watching us first to see what we innovate and come up with, and then how they can implement it and turn it into their own, whether it's on their own blockchain or whatever the case may be. Yeah, I think we'll see a lot more of that. I couldn't agree more. We'll leave it there. Is there anything else you'd like to add today? Like anything you wanted to cover that we didn't?
It's a good question. I think that if I'm speaking to you as kind of a crypto user and someone who's feeling a bit disappointed or feeling like the space didn't play out as they were kind of promised, what I would say is I do see a lot of opportunity here. And I see this as kind of 2016 in the crypto space, or really the area between the .com crash and maybe the 2007, 2008 run-up in the crypto space. What happened with the .com crash was there was all this promise, people saw the potential of the technology, and then they became massive speculators on this technology. And the technology wasn't quite there yet, right? Pets.com was not worth $40 billion after all. Or whatever, I don't know the actual stats on that. I was like 5 years old. However, after that, we saw kind of the technology filling the boots of what happened originally. But there was a mispricing, right? People were still hesitant from getting burned the last time. It took a while for things to catch up. It took users and adoption to catch up as well. And we didn't see the same price action we saw in kind of 2000, 2001 until many years later. There was this long complacency period. There was this long period of just kind of depression, right? This long flat chop that is just like miserable to exist in as a speculator. And then eventually it was rewarded, right? So we saw companies, Facebook, Amazon survived this. eBay, PayPal, all of these companies kind of survived this speculative dump, chop, and then we saw them really fulfilling on the promise. I think we're in a similar space for crypto right now, and really what that represents is actually opportunity for those who do stick around. In the same, if you're kind of like hitting yourself, right? You're kind of beating up on yourself for having come here late in 2021 or participated in the meme coin frenzy and you felt like you were exit liquidity. It's the reverse right now, right? You can get in now, and I'm not saying like, put your entire net worth in, the next shitcoin. I am saying there's more opportunity now, and if you can understand that, you won't kind of commit the same mistake you did last time. So I do think there's tremendous opportunity here, and in the darkest, from the darkest bottoms come the greatest run up. So this is a pattern that's repeated itself time and time again. So I'm optimistic. I think there's room to be optimistic. It's a different market. You have to understand that, but it's worth sticking around and participating.
No, agreed. And one thing quickly with as you said, when they flatlined and then we saw these companies elevate afterwards, is do you think that also helped improve their own innovation? Like things like Netflix and Amazon, they had to innovate and change. And, we've seen Amazon change tremendously over time compared to what they initially were to what they are today, Prime and next day delivery on pretty much anything you can think of under the sun. So do you believe, did these flatline periods as well kind of force innovation from these companies, not just for survival, but to kind of take off again?
Well, I'm sure a lot of investors, speculators, venture capitalists, founders got rich off of the first run up for pets.com. I'm not going to deny that happened, but it wasn't backed by fundamental value. Is it a bad thing for this bubble speculative cycle to exist or to have existed? I don't think so, right? I don't think it's I think the market's going to do what the market's going to do, and we can't really control that, or you can't wag fingers and say, oh, you shouldn't have speculated on this thing. I do think it's a much more healthy market, the one that tries to assign value to something that really is producing value versus trying to assign value to this kind of castle in the sky. But yeah, I guess it's playing out again, and I don't see it as a problem.
All right, Jack, thank you so much for coming on today. I really appreciate your time. Everyone, I'll leave his Twitter link down below, which you can click, follow him, and his podcast, Decypher. So make sure you go and listen to that as well. Thank you so much for coming on today, Jack.
Thanks so much for having me. I really appreciate it.